Really want to get you up to speed with the day's options trading. Really pleased to say that joining me now, of course, is Scott Bauer of Prosper Trading Academy. Scott, talk to me about what a VIX at 24, finally an elevation off of a below 20 handle last week, what that's signaling to you.
Yeah, Taylor, when you look at the VIX, and this is not Monday morning quarterbacking or hindsighting here, because we've talked about this repeatedly. When the VIX was down at 20, even sub 20, just way too cheap for this marketplace. There was no reason outside of maybe that this was summer trade for the VIX to be that low. So the 20%, it's up 18% or so today. This is probably a fair value here for VIX. In fact, the 50 and the 200-day moving averages are both right around 24.5 or 25, which the 200-day moving average was hit today, and then we backed off a little from there. This is where the VIX should be trading. And I have been telling people for weeks on end here that if you want to buy insurance in this marketplace, you've got to buy the VIX when it was down at 20. We always want to get insurance when it's on sale. The VIX was on sale.
Scott, I'm going to do a humble tease here, pushing forward by about an hour, where we're going to be focusing on China and the signals that we're getting from the PBOC overnight as well. How are you thinking about some of the way that Chinese equities have been trading and the pressure and the feedback loop to the U.S. equity market today?
Absolutely. And, I think there's some opportunity here, but very short term. I would not play anything longer term in some of these Chinese stocks because the risk of, the delisting is still out there. But with what they're doing, with what the PBOC is doing here, they're making it really cheap. It's totally opposite of what's going on here. So I'm looking at a stock like Alibaba, who ever since earnings came out a few weeks back has basically flatlined. It has done nothing. I think there's a really good opportunity here over the next couple weeks, maybe the next month or so, for this thing to really, I don't want to say take off, but I could see a good 5 to 10% here in Alibaba. So I'm actually buying a call spread here, which I think is really cheap. The September 95 100 call spread. I can do that for $1.30, $1.40 or so. I don't need much of an increase here. And with what's going on with the PBOC and cutting rates here, again, Baba, Baidu, some of these other stocks, for the short term, I think could be a really good opportunity.
Scott, I want to pick your brain and go broad. We just had a story out talking from some of the quants over at Nomura, saying that it is no coincidence that we got about $2 trillion of option expiry on Friday, and then this is the opening and sort of the setup trade that we get today. What did you notice within the options expiry on Friday and the way that that has meant for positioning for guys like you today?
Absolutely. And in fact, if you look at overall option volume versus overall equity volume, the option volume is far, far greater. So that there was a big option expiration. There were a lot of call options that went out worthless. Call options that people had bought over the last few weeks when the market, had maybe topped out a little bit. So there was some very bearish expiration here. Now, I don't see this as a major sell-off. I don't think because of that bearish expiration, that means that the market is going down 5%, 10% or so. I think that what you're seeing is a lot of positioning ahead of Powell and Jackson Hole this week. I think we level off for the rest of the week here and could actually quite possibly rally into Friday.
Really appreciate your time and perspective. Scott Bauer, a Prosper Trading Academy, as always, for joining me for Options Insight. Stick with us from New York. This is Bloomberg.